Hey, this is Nick from Income Digs, and we're talking today about real estate accounting, real estate bookkeeping, and specifically, we're going to demystify security deposits. Okay, we're going to talk about how to record them, where to put them in your balance sheet, how to treat the various different bank accounts that might be holding security deposits, even the interest that you might gain on behalf of your tenants for those security deposits. We're going to talk about all that. We're going to go deep in this video. That being said, we're going to go deep on security deposits. We did just launch a free mini course called QBO Minicamp. Check it out. It's awesome. We just launched it. It's completely free, no strings attached at all. There's a link here if you want to check that out. And it's over 2 hours of content where we go through some other topics as well. But for today, we're going specifically on security deposits. We're getting a lot of questions on this, so I want to just break it down, make sure we understand how to handle this in QuickBooks Online. First thing, as we go into QuickBooks, let's talk about what a security deposit is. Okay, so we get funds from our tenant, and we're going to hold on to those. So let's talk about what type of account that would be. And really, the way I want you to think about it is it's not your money. Okay, so if you were to issue an invoice to a tenant and say, you owe me $1,000 for a security deposit, when they give you that $1,000, it's their money that you're holding on to. Okay, with that in mind, that tells us that this is a liability account. Okay. So we're going to want to, first thing I want you to do is within your chart of accounts, create an account called security deposits. Okay, I got one right here. And if you're creating it for the first time, you're going to go new. You're going to go to liabilities. Okay, and then here, other current liabilities makes complete sense. Okay, and then call it security deposits, and you should be good to go. Okay, for now, that's all we're going to do. We're not going to do anything with our checking accounts yet. Let's just talk about recording those security deposits. One way that we might record a security deposit is when we purchase property. Okay, so to demonstrate this whole entire thing, I'm going to go to a balance sheet as of 2018. I'm recording this 2023, but just to kind of keep it blank, here's my blank balance sheet. Okay, so we might record the purchase of property. And when we do that, often when we're buying a rental property that has a tenant in it already, we have a security deposit on the books. Okay, so let's record a purchase of property. Super simple one. Okay, if you need help on recording the purchase of property, check out the videos we have on that. This video is not really on that, but we're going to touch on it briefly here. So when we buy property, we're going to allocate a certain amount to land. Nothing's searching right now. There we go. Okay. Certain amount to land, a certain amount to building. Okay. We're going to separate those couple of things out. Let's say I bought the property for $125,000. So let's say the land is $25,000. The building is $100,000. Okay. And then let's say that I got a conventional mortgage on this. Okay. For, let's just say $100,000. And now security deposit, right? So we get the security deposit that the previous landlord then transfers to us, right? The seller transfers to us. So that security deposit will show up here. We're going to credit that the total amount that we get. So now that amount should be on your closing statement, but it's usually whatever the balance is. Okay, so you're taking over as the new landlord. So whatever that balance of the security deposit is, like $1,200 or $1,000 is going to go in here. So let's do that. Now, it could be one, it could be two tenants. Depending on how you're setting up QuickBooks Online, if you're going to be tracking by tenant, which is what I'm going to demonstrate here, then we'd probably want to separate it out. So let's say on your closing statement, it says you get $2,500 in security deposits, but it's split between two tenants. You're going to want two lines here. One for security deposits for tenant number one, and then another for the other tenant. So we would indicate here what tenant this is. Now I'm going to use class to track this property. We're going to call this 122 Buffalo Street. Now, this is a case where it goes into, should we use class, should we use customer? Here, I'm going to be using both. Actually, I don't think I have one set up for 122 Buffalo. We're going to add a new customer. So I'm going to add 122 Buffalo Street as a customer. And then I'm going to add a tenant named Juliet. Okay, so I'm going to go new customer, and I want this customer to be a sub-customer, which I'll be able to do eventually here. Okay, so there's Juliet. Excellent. Sub-customer right there. Parent customer 122. Okay, now whether or not you're tracking by customer or class, again, that's not really the topic of this video, but if you're going to be tracking your security deposits by tenant, you're going to need to use customer here, okay? I'm going to do another one. Let's do a new customer. We're going to call this customer Olivia. Okay, also a sub-customer of 122 Buffalo Street. Okay, so that allocates my security deposit, and then all the other closing costs, there's some closing costs that we're going to have to pay. Let's say there's like $5,500. Okay, and then that means that we need to come to the table with some cash, so whatever our checking account is. Again, this is not a lesson specifically for closing on a property, but you can see that. Okay, the security deposits are going to populate. So when I save and close this, what I should see on my balance sheet is the property has populated, land, building, closing costs, and my security deposits as well. And when we talk about allocating and indicating the tenant, the important aspect of that, the reason we do that is when we drill down into the security deposits, we're able to then group by customer, and that will tell us the balance of the security deposits by tenant. Okay, right there. So I could see that Juliet has $1,250, Olivia has $1,250. Now let's say that Juliet asks if she can bring an animal, a cat, into her apartment. Okay, and we say, okay, you can, but we require an additional deposit for that, an additional security deposit. Okay, or you have a brand new tenant coming in for the very first time and we need to record that deposit. How do we do that? We're going to typically do that. We don't need to use a journal entry for that. We can do that with a sales receipt or an invoice. But it does require us to think about our products and services, because when we go to, say, issue an invoice or a sales receipt, QuickBooks is going to ask us what's the product or service that you used. And we're going to want to set up here a security deposit. So let's do exactly that. Let's go to our products and services and investigate a little bit. Now, you're going to be using products and services if you're doing capital improvements and renovations. You're certainly going to be using those for exactly those scenarios. So I have all my categories here. We have lessons on that. We have videos on that. You're also going to use products and services for receiving money. And that's kind of like the more traditional way to think about it. So rent will be one, right? So if you're managing your tenants in QuickBooks Online, you're going to want to set up products and services for the various rent items that you sell. And you can see here, you're going to want to do the exact same thing for security deposits. So let me do one. Let's set one up. Okay, so let's create a service called 122 Buffalo Unit 1 Security Deposit. Okay, now this category I'm going to indicate as security deposits. Class I'm going to leave blank. Actually, no, I should indicate class is 122 Buffalo Street. Great. I sell this. Okay, what's the rate? It's $12.50. Okay, typically standard. That's my current rate for the security deposit. Okay, now here's the really important part. When we use this product and service, what income account does it go to? It's not income, it's actually security deposits. Okay, so right there, security deposits. So I'll save and close that. And let's make one for Unit 2 as well. Okay, so we'll make another one here. Service, 122 Buffalo Street, Unit 2 Security Deposit. Category is going to go into security deposits. Class 122 Buffalo. My rate here, again, $12.50. Just happens to be the exact same amount. Doesn't have to be. Okay. Now I mentioned that we could potentially have a separate security that we're requiring for our pet. Let's add that one. Now let's say that that happens to be the exact same no matter what unit it is. So we can do 122 Buffalo additional pet deposit. Category, security deposits. Class, 122 Buffalo. And my rate on that, let's say that I charge an extra $150, okay? Income account goes to security deposits. Save and close, okay? So now that I have those set up, we go back to that balance sheet, just as our starting point. Let's record a sales receipt for, let's say that Juliet is asking to bring an animal, and we decide that that's okay with us, but we are going to require an additional security deposit. So we're going to issue a sales receipt, assuming that she's paid us, okay? Now, if you want to get paid by Juliet, you might want to use an invoice and use QuickBooks Online Payment. Okay, so sales receipt date is the date that we say, okay, we've accepted this money. And what did we accept? What product or service are we providing? Well, it's that pet fee, right? So we can start typing 122 Buffalo Street, additional pet deposit, and we can just say, negotiated pet deposit. Okay, and see that it pre-populates with the rate and the class. Perfect. Now, keep in mind that the rate doesn't have to always stay 150. It pre-populates and it saves us time. But again, if we negotiate with this tenant, maybe she's a really good tenant, we don't want to lose her, and we're like, you know what, we need an additional deposit. We can do it for $100, okay? Now, of course, you have to have the right legal agreements and stuff in place, and I assume that you would have that sorted out. But if that's the case, we can change this rate to 100, no big deal. Or we could keep it at like a rate of 150, but half off, $75, okay? Whatever the case, we can make that edit. What's important is that when we accept this money, okay, we're depositing it to our checking account, and we're going to talk about different checking accounts in a second. We're depositing it to our checking account. We're going to save and close. What happens on our balance sheet? You can see that our security deposits has increased right there, okay, and our checking account has increased. So if I drill down into this and again sort it by or group it by customer, we can see that for Juliet, I got the $1,250 when I closed on the property, and then I got an additional $75 pet deposit. So totally for Juliet, $1,325. Okay, now let's talk about those deposits. Okay, so some of the jurisdictions that you are in will require you to keep these deposits in a separate interest-bearing account. Okay, now that legal part, that's not for me to decide or to talk about or to give advice on, but if you're required to do that, how do you deal with it in QuickBooks Online? What you need to do is have a bank account for each of those separate interest-bearing accounts, okay? Which can get a little messy, I'll be honest with you. So, to whatever degree you can get away with not doing it, I'd encourage you not to. But again, it's for the protection of the liability. So let's say that you had some checking accounts that were specifically for security deposits. What I would do is I would create a kind of a master account under bank accounts, and I would call this security deposit holdings. Okay, create that account. It's not an actual bank account. Okay, but then within that, security deposit holdings, we're going to have another one that's like 120 Buffalo security deposits. Okay. And then maybe you're going to have another one that's, your other property, right? $264 Union security deposits, okay? So that's up to you to figure out if you're required to do this or not. If you are, when you receive that money, or you better at least transfer it, you're going to want to move it to the appropriate interest-bearing account. So that, let's say this security deposit right here, I'd want it deposited to my 122 Buffalo Street security deposits, okay? And then if I closed on a property and that money, didn't get deposited at any specific place, if I need to move that, I better do that, okay? So I better journal entry that over and actually physically move it, okay? So it's leaving JMB. I have that $2,500 is leaving JMB checking, and it's going to my 122 Buffalo Street security deposits. Okay. And again, that's going to be up to you to figure out, work with your legal experts on that. Let's go to my balance sheet as of 2018. Now you'll see that I have, the 2575 is sitting in that bank account, and then it actually matches here. Okay. So good. This is looking fine. And then the other thing that we might be required to do is to credit the interest that we gain on that to our tenants as well. Okay, so how do we deal with that? That interest is going to populate here kind of monthly. So for that, we would do a journal entry where we would account for the additional funds into our checking account, and then we need to offset that as well. And so what I encourage you to do, and we can do it right within we can create this account, is that the checking account is going to go up. So that 122 Buffalo Street security deposit account goes up by interest, right? And what's the interest going to be like? $4.50, right? It's really honestly tedious and annoying, but that's going to happen, okay? So that goes up, and then what do we do with it? Is it income? No, absolutely not. What I would do with this is I would do interest on security deposits, new liability. That's a sub account below your security deposit. So other current liabilities. Okay, name of this would be, actually I'm going to call it interest on. Interest on security deposits. It's a sub account. Okay, and it's a sub account of what? Sub account of security deposit holding. Nope, security deposits right there. Save and close that right there, 450 cents. And we need to indicate who it is for as well. Okay, so this can get really annoying and tough, but you can do it here within QuickBooks. So you might have another system for tracking that, but if you wanted to do it within QuickBooks, you can do it here. You can see that the interest builds up, and that would then, now I'm able to pay it out. Okay, so when we pay it out, what does that look like? Let's say that Juliet is no longer renting from us and everything looks great. We're going to return that security deposit. All we do is we issue a check for whatever we owe her. Okay, so we owe, if we go again by customer, you can see that for Juliet. Okay, she's giving me $12.50 when I bought the property. She's giving me an extra $75 for the cat. And so far, we've accrued $4.50 in interest. I owe her a total of $13.29.50. Okay, so if I'm going to write that check, I'm going to do an expense. I'm probably writing it from my security deposit account. Okay, and we're going to take the security deposits and the interest as separate lines here. So I'm going to pay back the $4.50 in interest, and then I'm going to pay back the $13.25 in security deposit to Juliet. And what this will do, this will zero out my security deposits for Juliet. Okay, let's save and close. Let's see what that does. Okay, so I'm on the exact same sheet here. And you can see that if I were to do this by customer for Juliet, this is all the money coming in, $12.50, $75, and then we back it all out, and we currently owe Juliet $0. Okay, what does that look like on our balance sheet? Okay, we've reduced the amount in our checking account there, and we've reduced our total security deposits as well. Okay, now the last thing we'll get into here is what about the case where we're not going to give it all back, right? That, you know, something was damaged, or maybe the pet made a mess, and we're not going to physically give back all that cash. How do we deal with it? Well, the important thing to remember is no matter what, we still want to zero out the security deposit. You know that when Juliet stops renting from us, we won't owe her any more security. Okay, so we have to zero that out for her account. Okay, we either have to pay it all back, or we're not going to pay it all back, but we have to record it all as gone with some kind of offsetting income or negative expense. Okay, so let's talk about that. Let's say that instead of, now the interest we're going to owe to her almost no matter what. That isn't anything that we can get around. Okay, so what we can do, we can find that transaction. I'm going to drill down to grab it. So this expense here. Let's say that we're only returning $1,000. Let's say we're retaining $300 or so. Okay, how do we deal with that? Well, honestly, this part stays the exact same. We have to zero out security deposits, so we have to indicate the $13.25. We have to return the interest. Okay, now if we are withholding something, we're going to use some kind of account like this, security deposits withholding. It's going to be an income account. Okay, and you're just going to say, you know, retainage for damage to property. Okay, and whatever that retainage is. Again, I'm not going to tell you what you are allowed and not allowed to retain. That's up to you and the legal advice that you receive. But let's say that you are retaining $320 for damage incurred. You're going to put in a negative $320 right there. And you're going to put that toward Juliet. And that means that I'm writing Juliet a check for $1,009.50. What's really great about the way we do this is no matter what, your security deposit accounts are going to zero out. There's nothing else to do here. We're just going to put in this negative. What that does is it won't change this at all. Okay. If we go into now our P&L, that security deposit withholding shows up as a revenue item. Okay, so that's how we return it. So what's important here, as we kind of close up, what we need to do is we need to be able to track the security deposit as a liability, potentially adding sub accounts in our checking accounts and interest accounts in that liability as well. And whenever we take on a new tenant, we want to populate that security deposit. Whenever we get rid of a tenant or we have a turnover, okay, that's why that's how a tenant leaves us. Okay, we need to return that security deposit in full, even if the cash exchange isn't exact. Okay, we need to zero it out for that tenant, and that happens with that exact expense transaction that I showed. Okay. Now we can dive really deep in a few different ways on security deposits in different scenarios. So I encourage you to add some comments here, ask some questions, and we can do follow-ups as necessary. I also encourage you to check out that course I mentioned at the beginning, QBO Minicamp. It's an amazing course to establish the fundamentals. Again, 100% free, no question about it. And you also gain access to our community for a little bit, which is really awesome. All right. But until next time, check out all the free resources we have. Like and subscribe to this channel. We're going to be posting videos every single week all about QuickBooks Online and different tools I use for my real estate investing business. I look forward to seeing you on the next video.